Everyone talks about investing in stocks, bonds, and mutual funds, but what about the tangible stuff? You know, the things you can actually touch and feel, like real estate, gold, art, and even collectibles. Today, we're diving into the world of tangible assets to show you why you might want to get your hands dirty with real-world investments. So, let's start with the basics. What are tangible assets? In simple terms, these are physical things that have value and can be touched or seen. Unlike stocks or bonds, which are intangible, tangible assets are, well, actually tangible. Think of it like this: you can't hold a stock certificate in your hand, but you can certainly hold a gold coin or a classic car, which is much cooler when you show it off to your friends. There are several types of tangible assets you can invest in: real estate, houses, commercial properties and land; precious metals, gold, silver, platinum and other shiny things; art and collectibles, paintings, antiques, rare comic books and even vintage toys; agricultural assets, timber, farmland and other agricultural investments. Each asset class is like a different flavor of ice cream. Real estate is the vanilla, reliable and classic. Gold is the chocolate, shiny, precious, and a favorite during tough times. And collectibles are the rocky road, a little more risky, but oh so fun to talk about at parties. So, why should you invest in tangible assets? Well, here's the thing: stocks and bonds can be volatile, up one day, down the next. But tangible assets have historically been a great way to hedge against inflation, market downturns, and even currency risks. They're like the solid foundation of your financial house, while the stock market is busy being that dramatic friend who throws tantrums over small stuff. Let's start with the most classic of tangible assets: real estate. From single-family homes to rental properties and commercial spaces, real estate has been a staple investment for centuries. Real estate is like that solid friend who never lets you down. It's all about location, 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 and then some more location. Plus, there's the potential for steady cash flow from rental income. Not to mention property values generally go up over time, so you might also get that sweet price appreciation. It's like buying a great pair of shoes, and a few years later, they're worth more than when you bought them. But unlike shoes, the house stays, mostly. Next up, precious metals: gold, silver, platinum. These shiny metals have been prized by investors for centuries. They're often seen as a hedge against inflation, stock market swings, and currency devaluation. Gold's like that treasure chest you find in movies. It's been a symbol of wealth for thousands of years. It's shiny, it's valuable, and it's basically the OG of tangible assets. Precious metals have a limited supply, so they tend to hold their value over time. It's like buying a tiny piece of the Earth's treasure which, spoiler alert, doesn't lose its sparkle in a market crash. Now for the artsy part of tangible assets: art and collectibles. From rare paintings to vintage comic books, there's a whole world of high-value items that can appreciate in value over time. Art and collectibles are like your cool hipster friends. Sometimes a little hard to understand, but they definitely stand out at parties. They're a bit more niche, but boy, can they be worth a lot if you pick the right piece. Buying collectibles is about finding hidden gems, like that rare first edition comic book or the vintage toy that no one thought would be worth anything. It's like treasure hunting, but with a price tag. Last but not least, agricultural assets. You may not think about it often, but farmland, timber and crops are tangible assets that can provide long-term returns. Now, you don't have to become a full-fledged farmer to invest in this, thankfully. You can invest in timber or farmland, and those assets can grow over time like, well, plants. The best part, you're literally investing in nature's way of making money. So how do you get started with tangible assets? First, do your research. Understand the market you're entering, whether it's real estate, gold, or collectibles. You can buy real estate through brokers or directly precious metals from dealers or ETFs, and collectibles at auctions or specialty dealers. It's like shopping, but with much bigger stakes and sometimes a little more glitter. So, what are the pros and cons of tangible assets? The pros: they're great for diversification, provide stability, and have long-term growth potential. But the cons: they can be illiquid, meaning it's harder to turn them into cash quickly. Also, they can be expensive to store, insure, and maintain. So, if you've got a £10,000 gold bar or a fleet of vintage cars, don't expect it to fit in your garage easily. So, whether you're into gold, real estate, or rare comic books, investing in tangible assets can be a smart move for diversifying your portfolio. Just remember, like anything, it's about balance, research, and picking the right investments for your goals. Thanks for watching. Don't forget to hit that subscribe button for more tips on building your wealth, one tangible asset at a time.